Hello,
10 seconds ECB.
and welcome to today's live trading hour, which is brought to you by the Live Trade Room. Now, we've just got the ECB. We've got some major news coming out pretty shortly. So without further ado, we look to capitalize on some high probability trading opportunities across some of the world's largest markets, from your major foreign exchange markets through to your gold and oil, and also global indices as well. So we've got a major news event now. It is an ECB. We'll get their monetary policy statement. It's likely to be quite a volatile period for the euro. We're currently in a euro-dollar sell trade, so we want to see if we can stick with that. Please see our risk warning currently up on screen, of course, and of course always take note of the risks involved in trading these financial markets. And I'll just show you this news event because I'll put on our Squawk service now, so we'll get a little bit of a little bit of an update on that. Yeah, it's this news event in here. So we'll get the refinancing rate very much expected to be at 0%, which it is. Now there will be lots of discussions regarding forward guidance, and that's the central bank just sort of guiding the markets that way. So we'll get a little update. What I might do is just unmute our Squawk service, so we'll get a bit of a live update now on this news event.
Interest rates remain at their present or lower levels until they see inflation reaching 2%, well ahead of the end of its projection horizon and durably for the rest of the projection horizon. And they judge that realised progress in underlying inflation is sufficiently advanced to be consistent with inflation stabilising at 2% over the medium term.
Okay, so yeah, good afternoon, Finbar. Hope you're well. So we've got Christine Lagarde at 1:30. So again, it'll be really quite interesting.
ECB says they're committed to persistently accommodative monetary policy.
Okay, let's see how that's impacting the price, and we'll see what opportunities we have.
Adjust all instruments as needed, and they do repeat as well. The PPP envelope may not be used in full.
So not much of an initial kind of response, really. Probably getting a little bit more positive now.
The full release for the ECB policy statement.
Here we go. Now we're beginning to get a little bit of a move.
Last monetary policy decisions.
So we are now just breaking above the 2-day high, just sitting in here on the euro dollar.
So just to run you through the headlines again, as expected, the refi rate and the deposit rate were left unchanged. The Governing Council expects interest rates to remain at their present or lower levels until they see inflation reaching 2%, well ahead of the projection horizon. With regards to the asset purchase programme, they'll continue at 20 billion euros as before, and they'll run for as long as is necessary. Turning to the PEP programme, the envelope remains at 1.85 trillion and will run at least until March 2022.
So we've had quite a prolonged period of sideways moving price action. Now we're squeezing above that 11800. So we do have a sell play in this market, and that has looked like it's unwinding in the last couple of days, and we're now seeing, we really struggled and really failed to break new lows in this market. So if I get up my pen, there's 2 or 3 days of sort of negative price action. Now we don't necessarily think this is over for the dollar by any stretch, but we're certainly getting a bit of a corrective phase at this point. So largely inconclusive price action really over the last 4 or 5 trading days. So we'll monitor and see how this market just performs at these levels. Will we get a coherent retracement and a really explosive one? That remains to be the case, or remains to be seen rather. So prior to this news event, we were at the sort of the 1795 level, 1795, and we're now up at the 180807. It's just pulling back a little bit. So we've only really moved, I mean, it looks like it's quite volatile, but we've only really moved 10, 12 pips in this trade. So, and that's very poor basically for an ECB. We used to have trading conditions a few years ago where you could see a 100 pip move in a very, very short period of time. So we're getting a strong retracement right now. Is it going to find some support perhaps at these lower levels and then start to kick on to the upside, or is this a rejection of the 1800 level? We can certainly monitor and just keep an eye on it. So euro dollar is threatening to push higher. We'll just keep an eye on this on a 15-minute time frame. The euro yen, it's it's kind of struggling to break above these daily highs at the 130.26 so far. We're only sort of 8 or 9 pips away from that move, but will we see this euro continue to strengthen against the US dollar? Crude oil is edging higher. Not that convincing today, more convincing yesterday. And again, we've got the S&P 500, again, quite convincing yesterday. Today, not so much. So in our trade plan session last night at 9 o'clock every evening, we have a trade plan session where we look to plan our trades for the following day. We were certainly looking at the pound yen to the upside above the 151.30. Yeah, the 151.30, just above this high in here, and we're seeing prices squeeze higher. Crude oil above that 70. The level we were looking at last night is the 70.38, and the S&P, which is pretty much at that level now, the 43.61. So what we've seen is a little bit of volatility to the upside for the euro dollar, which has subsequently retraced pretty much back to its open price, or very close to it. And we do wonder and anticipate whether this it'll remain like this until we hear from Christine Lagarde from the ECB. Will have a press conference shortly. So it's tough to get into this trade before this ECB conference. This is kind of a strong rejection to the upside now, so we'll have to I suppose exercise a little bit of caution. We're now back below that 11800. Like, our bias is to the downside, right now, still, but that very well may change, and it looks like it's been beginning to change in the last 3 days. So we're just coming back into this little zone in here. This is our consolidation zone, and all we're doing is drifting sideways. So we like identifying support and resistance, because we can look to trade the breakout to the upside or to the rollover trade to the downside. So we shall see what opportunities we have. We might get further updates shortly. Okay. Okay, so we will have, we'll be hearing from Christine Lagarde. One of the things to keep an eye out for is the ECB's approach to forward guidance in terms of guiding the markets on tapering their massive spending program and potentially increasing interest rates. So this is something with the inflation story we're having to deal with. This is something all central banks are looking to get involved with. So we're just looking at the euro dollar in a lot of detail really right now. So now it looks like this is a really strong rejection to the upside, and now it looks like we could be close to sort of breaking this level down hit, which at least it will be a technical move in our favor. As to whether we'll get the fundamental support to the downside remains to be seen. The ECB and I suppose all central banks are relatively comfortable devaluing their currency. It does support exports, so if you get more for your money, then it's likely to see an increase of orders in manufacturing and services, which is obviously good for jobs and good for economies and things like that. So price pretty much is just drifting sideways. That's what's happening currently in the euro. That wouldn't be too uncommon, really. So just to clarify, we're in this consolidation zone, as you can see, for the euro dollar. Our bias for now is still to the downside, but it looks like that is in the process of potentially changing. So there's your big moves to the downside. And we're just looking for that next flush lower. Sorry, this is the little zone that we've been trading, so apologies, I just moved that there accidentally. So now it looks like there's a bit more of an appetite for these prices to actually push further to the downside. So sorry, I was going back to the daily time frame. So prices are moving from top left to bottom right, and we're just expecting a further flush to the downside. And we're currently in this trade. We've mitigated most of the risk on the trade. We had an initial stop loss up here, and we were able to bring it right down. So what we want to get into, I suppose, a position where we can remove risk completely and be able to book in profit on the trade. And that would certainly be the case if we got another flush to the downside. So let's have a look elsewhere, see what's going on. So we're clearly getting some pound strength, a really nice bounce back off the low. Now we'll be looking to see, because this market is in a downtrend. Well, let's say it's in a downtrend since June. So we've got like a good few days of further flushes to the downside, and we're anticipating another one potentially around these kind of monthly lower levels. You can see what it looks like on the monthly time frame. So will we get further moves and further squeezes to the downside? That's what we were trading. Now it's in the process of potentially changing that analysis, but we need to see a little bit more before we can change that analysis completely. Dollar yen very much indecisive. Dollar Swiss, a little bit of a bid there for the dollar against the Swiss franc. The dollar CAD, nothing of any major concern really. What we can say is if this price breaks below the 125.2022 level, we could expect further downside in this market. The Aussie dollar, it's just bouncing back off the low, so we're looking to get on the next sell trade if those opportunities present themselves, of course. Same with the New Zealand dollar. So we're in that pullback phase. It's important to know which phase these markets are in. We're in clearly defined pullback territory. So let's see if we can capitalize on a pullback opportunity in some of these markets. Pound yen, fairly consistent pullback off the lows, and so again, this is a pullback. This phase of this market right now is in a pullback phase. We can do a little bit of analysis. So we're in this little downward trajectory, so maybe we might run into a little bit of resistance up at these slightly higher levels. So this is just purely the pullback phase at this stage. The euro yen, it's already starting, it's already looking like we're going to get that next leg to the downside pretty soon for the euro yen. So this could be a market worth looking at. Gold is taking a concerted effort. We're seeing this little market squeeze ever more so to the downside. We're running into strong levels of support and resistance in these zones in here. That's where prices are now. So it just has a decision to make. There's your structural failure trade to the upside, where you can look for buying opportunities, and what you often get is a little bit of a pullback. However, there is a technical structural failure in this zone if it does push lower. So maybe we could then see the market down to 1764. So we'd prefer to be buying gold right now, to be honest, with the inflation story, but it is selling off, as you can see. Crude oil, it's really struggling above that $70 level now. The S&P is mildly turning bearish, not quite yet for the Nasdaq. Dow Jones is looking very, very mildly bearish. Same too with the FTSE, and the DAX is looking as strong as it was yesterday. The Nikkei is continuing to make new highs. So we're above this little level just in here. And just to touch upon Bitcoin, we had a lovely little bounce yesterday, largely off the positivity with the stock markets. There was a little bit more appetite for risk. We saw a lot of capital come into to Bitcoin, but we do have this descending triangle. It's important to perhaps note that we've got this triangle really in this little zone here. and we really like the moves that you can often get if you get a breakout to the downside or you get a structural failure trade to the upside. So we do like these descending triangles, but right now your bias should probably still be to the downside for Bitcoin. And if it breaks this 29,000 level, you'll probably see Bitcoin down to close to 20,000. So it's definitely a market to be very, very careful of right now. So with the indice markets, the US indice markets looking like they're just taking a rollover to the downside. We're also seeing that trade in the euro dollar. So there's your rejection to the upside. And now this becomes kind of a high probability sell trade to the downside as well. So that's kind of what we're seeing. The difficulty we have is we've got Christine Lagarde in 22 minutes, and the price action in the build up to that is mildly negative. Okay, that means that our sell trade is performing quite nicely, but if we do get a nice leg to the downside today or tomorrow, that would be certainly in line with our analysis. It's just a shame we can't really speak for some of the other dollar pairs just yet. So we're a little bit all over the place, but the play really is weakness in the yen. Weakness in the euro, should I say? Apologies. Even the euro pound is taking a bit of a hammering. So the trade really for the afternoon is without a doubt in the euro. So really it's just a focus on the euro pairs. So what we can do is we can just narrow our focus a little bit. Euro yen, perhaps. So this is looking quite positive, certainly technically to the downside. Let's look at it on the hourly because we've been drifting sideways for quite some time. See, the euro dollar has been a lot messier than ideally we would have liked. But what we'll do is can certainly identify these levels in here. Okay, so what we're now looking for with these trades is a sell trade down to these lower levels, and there's a structural failure trade to the downside as well for the New Zealand dollar. We would just err on the side of caution as we go into Christine Lagarde. You can often see some really wild swings during these ECB events, so we'll monitor it carefully. She's due to start a press conference in 18 minutes, so we've got a little bit of time. We will just continue to monitor some of these trades here. So potentially further upside for the crude oil markets, and there's a bit of indecision now. So we've got a little bit of indecision up here, bit of a question mark. And we'll just monitor crude oil for now. We just want to see what happens to that price. So how much appetite do we have for the euro dollar to the downside and the euro yen to actually roll over further lower? So for those of you that are interested in price action, we look for swing highs and swing lows, and those can be identified relatively easy. And I guess some of the things that we often get asked about is how do you know a level is support, and how do you know a level is resistance? Well, what we can do is you can take swing highs, and you don't need to be too precise about this. I know that sounds a bit counterintuitive, but if you take swing highs and swing lows, you can see often how price reacts to those levels. So if I clear this off screen, so you can see if you take this little swing high in here, price has failed to sort of break new highs. And if you take this little double bottom down here, you can see prices eventually break through that level. So there's a bit of a period of consolidation up here, followed by actually a thrust to the downside. Then the market makes a low, so you can mark that swing low, and then we get structural failure trades to the upside. So you get your inevitable pullback, but look what level it pulls back to. If this is support, it now becomes resistance, and it's happened on a few occasions. This is a strong level of resistance, and you don't need to be too accurate. The size of these markets are absolutely huge. So if we're talking about 5, 10, maybe even 15 pips, it's really not that important. The point is price makes a concerted effort to bounce back to those levels. And then you get, and these are all sort of, there's your breakout trade, there's your pullback trade. You probably have a couple of opportunities there for pullback opportunities. If your bias is to the downside, which ours has been, you take this little swing low. What you can see is you get a little further structural failure trade to the downside, so that gives you more confidence to try and stay in the trade. We make a new low down here, and what we're doing all the time is making, if this is a high, this is a lower high, this is another lower high in here, lower high. We're actually, and this is what we can identify potentially as another lower high. We're identifying a low, a lower low. And for those of you that are familiar with technical analysis, this is the definition of a downtrend, where you're seeing a series of lower highs and lower lows, and prices continue to, and within that you get breakout trades to the downside, you get pullback trades, you get breakout trades again, and then you get this market pulling back to this previous level. So these support and resistance levels continue to shift, and then you get an opportunity to get in on a sell trade. We can identify these lows down here. We get a breakout to the downside, we make a new low, and then we pull back. And this price action just inside this little zone here has been sort of fairly consistent. Resistance now below it, and support over here on the left hand side. So we're constantly sort of looking at these levels of support and resistance. Apologies if it's a bit messy on screen. What I'll do is we'll just identify these levels of support and resistance with just red, and we can. So when we trade markets, we pretty much go through a lot of this analysis, and we kind of interpret markets in these ways. And we're looking to make decisions in and around these decision levels in here, support and resistance levels. That's where we make the decisions. So there might be an opportunity to get into this trade now with a structural failure trade to the downside. So that could be the next trading opportunity. The difficulty we have is we've got Christine Lagarde in about 12 minutes. So we don't really want to be tying up capital between now and over the next 12 minutes, just in case these markets reverse and start, the real directions potentially to the upside, and we don't want to get caught in any of that kind of news event type price action. So if we've already got a statement, so if she starts discussing the pros and cons of that, and this market has reacted negatively so far, we are probably likely to see further downside. That would be what we're preparing for in these markets. So the euro dollar to the downside, the euro yen to the downside, and we'll keep a close eye on the S&P, and we'll keep a close eye on crude oil as well. Just looking at these on the daily time frames, and so what I'll do is we'll look for this market to the downside. We'll look for this market to actually continue further lower as well. Oops, let's get rid of that one. And this is with a strong rejection of the high as well. So, and this is now a structural failure trade to the downside. So this is what we're looking to monitor basically. So these are rejections of those levels. Now it looks like we're getting rejections to the downside, and this is when sort of trading can become a little bit confusing. What we recommend in situations like this is to just remain calm and to just be a little bit more patient. Okay, so we've got Christine Lagarde in about 10 minutes. So if you can just give me 5 or 6 minutes, I'll be back to you, and we'll prepare for this event. Now we might see some really volatile price action today, so hopefully there'll be some good trading opportunities for us. What I'll do, if that's okay, if you could just bear with me, I'll just put on I'll tell you what, I'll leave these details. All right. Okay, welcome back. Apologies for that. So really, we're just preparing for Christine Lagarde now at the ECB press conference. We actually have the press conference here, so we'll be playing it live. So what's happening with the euro? There's a bit of euro weakness across these markets. We're looking for further downside for the euro, and we've got a couple of rejections to the upside, with some
3 minutes away from the
volatility.
bottom of the hour.
Lower.
US initial jobless claims seen at 350,000. Continuing jobless claims seen at 3.1 million. And the Chicago Fed National Activity Index seen at spot 3.
Okay, it's all go at the moment. So we've had the ECB have kept their rates at 0. We've had the policy statement being released, and we're now about to hear from Christine Lagarde. So we'll be able to hopefully broadcast it through this. And really, we want to, in addition as well, we've got unemployment claims numbers. So that's been increasing now over the last number of weeks. You can see where we've come from, unemployment claims in about sort of 6.6 million up at these levels. And now we're clearly down to the hundreds of thousands. So we're down to 350,000. So that's, the lower that gets, the better it is for the economy. More people are back to work. So that very well may influence the dollar a little bit as well. So we've got that news out in about 30 seconds or so. So let's look at the price action.
1 minute till the US jobless claims, looking for 350,000.
Okay, maybe there is 1 minute left. So it's important to say that there is a big question mark over markets like the S&P.
10 seconds.
I suppose longer time frames were probably very likely to be at all-time highs. There is this concern about where we're at with inflation right now, so we'll see.
Still waiting for US 419,000 for initial claims, 3.236 million for continuing claims. The Chicago Fed spot 09. Just to repeat, US initial jobless claims much higher than expected, 419,000 versus 350,000 expected. The prior revised up to 368,000 from 360. Continuing claims higher as well, 3.236 million versus 3.1 million expected. Prior revised up to 3.265. And the Chicago Fed National Activity Index drops spot 09 from spot 26. ECB press conference getting underway now as well.
Okay, so what we'll do is we'll broadcast, I suppose, just key phrasing really. Worse than expected. There's probably close to 70,000 more people applied for unemployment claims in the US, which is a big miss. Actually, it's significant. But now we've got the ECB, so that's very likely to dominate proceedings, and we'll see how we get on. So I'll just, I think she's just about to say a few words now.
Straight into the policy statement. I would like to remind you that we are today on our first monetary policy meeting and first monetary policy press conference post our new strategy. And if you remember, in our new strategy we committed to adopt a communication tools and a communication policy that would be more approachable, easier to understand. And although clearly we need to capture all the elements that you are used to, we tried to do that in a more palatable and easier to understand way. So don't be surprised if it is slightly different from what you were accustomed to, and I hope that you will not mind if it is a bit more simple and structured in a slightly different way. So let's begin. So, good afternoon. The Vice President and myself welcome you to our press conference. At today's meeting, the Governing Council focused on two main topics. First, the implications of our strategy review for our forward guidance on the key ECB interest rates. And second, our assessment of the economy and our pandemic measures. In our recent strategy review, we agreed a symmetric inflation target of 2% over the medium term. Our policy rates have been close to their lower bound for some time, and the medium-term outlook for inflation is still well below our target. In these conditions, the Governing Council today revised its forward guidance on interest rates. We did so to underline our commitment to maintain a persistent accommodative monetary policy stance to meet our inflation target. In support of our symmetric 2% inflation target and in line with our monetary policy strategy, the Governing Council expects the key ECB interest rates to remain at their present or lower levels until we see inflation reaching 2%, well ahead of the end of our projection horizon and durably for the rest of the projection horizon. And we judge that realized progress in underlying inflation is sufficiently advanced to be consistent with inflation stabilizing at 2% over the medium term. This may also imply a transitory period in which inflation is moderately above target. Let me now turn to the assessment of the economic outlook and our pandemic measures. The recovery in the euro area economy is on track. More and more people are getting vaccinated, and lockdown restrictions have been eased in most euro area countries. But the pandemic continues to cast a shadow, especially as the Delta variant constitutes a growing source of uncertainty. Inflation has picked up, although this increase is expected to be mostly temporary. The outlook for inflation over the medium term remains subdued. We need to preserve favorable financing conditions for all sectors of the economy over the pandemic period. This is essential to turn into a lasting expansion and to offset the negative impact of the pandemic on inflation. Therefore, having confirmed our June assessment of financing conditions and the inflation outlook, we continue to expect purchases under the Pandemic Emergency Programme, our PEP, over the current quarter to be conducted at a significantly higher pace than during the first months of the year. We also confirmed our other measures to support our price stability mandate, namely the level of the key ECB interest rates, our purchases under the Asset Purchase Programme, our reinvestment policies, and our longer-term refinancing operations, as all that is detailed in the press release published at 1:45 today. We stand ready to adjust all of our instruments as appropriate to ensure that inflation stabilizes at our 2% target over the medium term. I will now outline in more detail how we see the and then talk about our assessment of financial and monetary conditions. So looking at the economic activity. The economy rebounded in the second quarter of the year, and as restrictions are eased, is on track for strong growth in the third quarter. We expect manufacturing to perform strongly, even though supply bottlenecks are holding back production in the near term. The reopening of large parts of the economy is supporting a vigorous bounce back in the services sector. But the Delta variant of the coronavirus could dampen this recovery in services, especially in tourism and hospitality. As people return to shops and restaurants and resume traveling, consumer spending is rising. Better job prospects, increasing confidence, and continued government support are reinforcing spending. The ongoing recovery in domestic and global demand is boosting optimism among businesses. This supports investments. For the first time since the start of the pandemic, our bank lending survey indicates that funding of fixed investment is an important factor driving the demand for loans to firms. We expect economic activity to return to its pre-crisis level in the first quarter of next year. But there is still a long way to go before the damage of the economy caused by the pandemic is offset. The number of people in job retention schemes has been declining, but remains high. Overall, there are still 3.3 million fewer people employed than before the pandemic, especially among the younger and lower skilled. Ambitious, targeted and coordinated fiscal policy should continue to complement monetary policy in supporting the recovery. In this context, the Next Generation EU programme has a key role to play. It will contribute to a stronger and uniform recovery across euro area countries. It will also accelerate the green and digital transitions and support necessary structural reforms that lift long-term growth. Let's look at inflation. Inflation was 1.9% in June. We expect inflation to increase further over the coming months and to decline again next year. The current increase in inflation is largely being driven by higher energy prices and by base effects from the sharp fall in oil prices at the start of the pandemic and the impact of the temporary VAT reduction in Germany last year. By early 2022, the impact of these factors should fade out as they fall out of the year-on-year inflation calculation. In the near term, the significant slack in the economy is holding back underlying inflationary pressures. Stronger demand and temporary cost pressures in the supply chain will put some upward pressure on prices. But weak wage growth and the past appreciation of the euro mean that price pressures will likely remain subdued for some time. There is still some way to go before the fallout from the pandemic on inflation is eliminated. As the economy recovers, supported by our monetary policy measures, we expect inflation to rise over the medium term, although remaining below our target. While measures of longer-term inflation expectations have increased, they remain some distance from our 2% target. Let us look at our risk assessment. We see the risks to the economic outlook as broadly balanced.
Okay, so what's interesting to see during these press conferences is very little active price action, really, to be fair. We're seeing the euro yen just look like it's gonna just roll over to the downside. Probably mild euro dollar weakness, but nothing really more than that. And it's really the ECB just maintaining the same kind of line that they've always maintained, that broadly speaking we're on line for medium-term inflation targets. We're likely to see a transitory sort of uptick in inflation, largely sort of energy related. But it is transitory, like the Fed is saying as well. It's not as structural as perhaps as it was seen. There's lots of slack in the systems. Things are sort of moving along nicely, and they're prepared to be as accommodative as they may need to be. So where does that leave us? That's the interesting question to ask. We're going to have to wrap up this broadcast now in just a couple of minutes. Right, we're currently in our euro dollar sell trade to the downside. We're going to look to stick with that. Maybe it's probably like we're looking at the S&P. So the unemployment claims numbers seems to be hitting the S&P just a little bit. So we're seeing this price just roll over to the downside. Same situation with crude oil, and I just want to have a look at the yen pairs just briefly. So there's just a little bit more strength in the yen than there is elsewhere. And there is your structural failure trade to the downside. It is just a retracement on yesterday's buying, you see, that's the problem. So this is our trade plan, looking for the euro yen to the downside below the 129.71 level, and also the euro dollar. Well, we're currently in it to the downside, so we're going to look to stick with that trade, see if we get prices rolling further lower. What we'd like to do is obviously just break these little lows in here and clear that 1750 level. So we're only about 30 pips away, but if we do break that level to the downside, we can hopefully see some decent continuation. So look, on that note, we'll let you guys go. We're really just focusing on the euro dollar. Sorry, should I say on the euro itself, euro weakness. It just remains to be seen whether we will get that follow through or not. So on that note, thank you very much for joining us. We'll be back again tomorrow live for the last session of the week through our YouTube channel at 12:30. So feel free to join us for that. Give us a thumbs up if you can, and do feel free to subscribe to our channel, and we'll notify you when we go live. So from everyone here at the Live Trade Room, thanks very much. Take care. Have a lovely afternoon, and we'll speak to you soon. Bye for now.